Inspiring interviews with today's top landlords. This is the Rental Income Podcast. And now, Dan Lane.
Nick, you were on the podcast about 2 years ago. What do you think the biggest thing is that you've learned since we talked last?
Going from a small mindset of strictly caring about cash flow and looking at the big picture in this business of having enough cash on hand, taking advantage of maybe selling something when the right opportunity arises, and just looking at the whole business from a different angle outside of just strictly monthly cash flow.
Yeah, monthly cash flow is so important, but one of the most important things that we can do as an investor is keep some cash on the sidelines. You just never know when a big expense is going to come up on a rental property, and having that cash available will help you stay in the game. Nick didn't have a very big cash reserve, and he decided to sell off a rental property to raise some cash. And having that cash actually helped him survive two pretty tough situations. On the show today, we're going to talk about what happened and how he got through it. We'll also see if we can figure out how much cash you should set aside for emergencies. You don't want to have too much cash, but you also don't want to have too little. We'll see what Nick's going to do going forward. We'll also take a look at Nick's numbers. We'll see how much money he was making from his rentals 2 years ago and where he is today. Joining us on the show from Princeton, West Virginia is Nick Wood. We'll take a really quick break to thank our sponsors. We'll come right back and we'll talk to Nick. I've had tenants that have either broken their leases or stopped paying rent, and I'm sure you know that this can be very expensive. It's very easy for the cost to exceed the amount of money that you're holding for a security deposit. And because of this risk, I started using the Guarantors to guarantee my leases. The Guarantors protects your rental income against rent defaults, vacancy loss, lease breaks, holdovers, and more. And this is all at no cost to you. Your tenants pay for the insurance premium. If you want to learn more about their platform, check out my bonus episode from September 15th, 2022. It's titled, "Is This Better Than a Security Deposit?" If you're ready to sign up, you can enroll within minutes by visiting theguarantors.com. Again, that's theguarantors.com. It's a lot of work to find a really good rental property, and when you actually find that property, you want to make sure you're working with a lender that can get that loan closed. The lender that I recommend is Chaley Ridge from Ridge Lending Group. She's a nationwide lender, and her specialty is helping investors finance rental properties. She has a ton of loan programs, and she can find something customized to you for your situation. If you want to find out more or you're ready to get started today, just go to ridgelendinggroup.com. That's RIDGE lendinggroup.com. NMLS 42056.
Rental Income Podcast.
Nick, let's start off talking about when you were on the show 2 years ago. What did your portfolio look like back then?
At the time, Dan, I had around 15 units, and that was a 12-unit building, a duplex, and a single-family house.
And what about today? What does your portfolio look like right now?
Today, I've got 21 units, and that's comprised of that same 12-unit building, another 5 multifamilies, a single-family townhouse, and then 3 individual single-family houses.
Wow. Okay. So you've grown a lot in the last couple of years since we had you on the show. Now you mentioned at the beginning that having cash on hand is, or making sure that you have enough cash on hand is really important, and that's something that you've learned over the last couple of years. Can you explain what you mean by that?
Yeah, absolutely. Once you get into this business, into the weeds of this business, you're going to meet others that there's a thing that goes around that real estate investors don't have a lot of cash on hand. And I'm one that's more risk averse in that part of the business of I want to have enough cash on hand. So a good rule of thumb that I came up with was if, you're bringing in $10,000 a month in rents, you want to have 3 times the amount that number in reserves, liquid reserves, whether that be, a line of credit or actual cash in the bank, because you can get yourself in a real pickle like I actually did back when the hurricane just recently hit. So Big lesson I've learned is having liquidity.
Yeah. I mean, that is so hard to do. I mean, I know personally, whenever I save up some money, I always want to buy another property. I want to keep growing, but having that money available for emergencies will really keep you in the game. And I guess that's what you figured out recently.
Absolutely. Yeah. Keeping you in the game. That pile of cash that you have for reserves, you need to dedicate it for reserves. Yeah. That's not going to be money that you use to go out and make another acquisition. That's money that you're keeping to allow yourself to sleep better at night. So
you figured out 3 times the amount of monthly rent that you bring in is a comfortable number for you to have available.
Absolutely. For me, that's what I found to be more than enough, honestly.
So let's talk about what happened. So you had some big expenses recently. What happened?
So the hurricane rolled in, and I'm in Southwest Virginia, the state of West Virginia. And, we never thought a hurricane would ever do some damage to our area. Parts of North Carolina obviously got hammered, but as you kept traveling up through Appalachia, towns like mine, we got hit pretty hard just with rainfall and wind. And my 12-unit building, it's a 30-year-old building, so not terribly old. We had some gutters and storm drains get overwhelmed with the amount of rainfall we had, and they backed up, and needless to say, 4 units who are partly below grade woke up with 8 inches of water in their floor. Wow. All throughout the units on a Thursday morning. And it was just, we handled it with positivity, but it was chaotic. I was on my way out of town, and I learned basically it was going to end up meaning they have to move all their stuff out, rip up all the existing floor, dry it out, and put new floor back down. Just a lot of variables at play, but That was a shock.
Yeah. So they called you. So you get a call from your tenant that morning that our unit is flooded.
Yeah. All 4 tenants called me in a frantic, and I got them on the phone. I calmed them down, and I think they were happy that I actually picked up. I've had landlords whenever I was in college that probably would have just said, "Hey, Nick, turn a fan on and don't call me again." But no, we calmed them down, and I told them, "Look, rest assured, once we get some people available, we'll get over there and pump that water out." That was the main goal, is getting some pumps to get the water out.
So
let it dry and then get it fixed.
How much did it cost you to fix everything up?
At that building, around $15,000.
$15,000. Wow. And that was getting the water taken out, and then you had to do new flooring.
Yeah. Thankfully, if my tenants didn't have family and friends that they could have gone and stayed with, I would have had to probably pay to put them up in a hotel until we got it straightened out. I'm the type that wants to take care of my tenants. I'm not just going to leave them out, but they thankfully had some people to stay with, and we were able to move their stuff around and to eat different rooms. And thankfully, a lot of them didn't have any damages to like computers or anything like that. Renters insurance is not in place right now for my renters, and I'm looking actively right now at making it a requirement for all my tenants to have renters insurance going forward, because thankfully nobody came and said, "Hey, my MacBook's flooded and ruined."
Right. Yeah,
or something else is ruined. This is your fault.
That is a great idea. Yeah, I definitely think you should do that. Now, what about your insurance? Like, would your insurance cover that?
So, honestly, Dan, when I first got it, I was like, I'm not filing a claim. So many people are filing claims right now. I think I can handle this. And originally didn't think that the costs were going to be that much. I have a really high deductible plan. My deductible's like $15,000. So it was right at it. And so I just didn't want to do the insurance route. Just didn't want to file the claim. Yeah. Just wanted to keep my record clean for now until something really catastrophic struck. But if I didn't have this cash on hand, if I was strapped, I probably would have did the insurance route and filed the claim. But at the time, I was just like, you know what, I'm going to wait and see, because I think we can manage this, and and it's not worth filing a claim over.
Well, in this case, I don't think it would make sense with your deductible being so high with $15,000 in damage and a $15,000 deductible. Like the insurance company isn't going to really cover anything, maybe a few $100 or something, but
exactly
that wouldn't be worth it. Why did you have your deductible so high?
Want to keep my premiums low. My dad's an insurance guy, and we've always talked about, you want to use insurance for the really catastrophic stuff. Mm-hmm. Yes. Was this bad? Absolutely. Was this a earth-shattering, world-ending fire? No. And so we've always maintained hey, don't be the guy who's always filing the claim, because insurance could end up canceling you if you file claim after claim after claim, and your rates typically go up, with claims. So, that's a general statement there, but he's an insurance guy. We talked about it, and he was like, I don't know if I would do it. If you can stomach this, I don't know if I'd do it.
Now, what about saving up the money? So you had about $30,000 in cash set aside for emergencies. What I guess, is that right? Is that about what you had?
Yeah.
Okay.
Yeah, that was what we had available.
Okay.
For reserve. Yes.
All right. So you had $30,000 there. How did you save up the $30,000?
So combination of, originally I told you on our first show, Dan, the business, I don't live out of it. So the business funds and the cash flow that we make, it's all recycled and it stays in the business. I'm treating this as a long-term investment business. So I had those savings, but also I had sold a few properties, and I just recently sold a big 16-unit building and ended up coming into some liquidity, and that helped me tremendously, having those funds.
All right. So to build up cash, like, I guess not just for your emergency fund, but just for your life in general, you'll sell off a property every now and then, come into some extra money, and then you use that for emergencies, and then also for anything that might come up in your personal life too.
Absolutely. Yeah. This specific deal with the 16 unit was a unique situation. And, if I didn't have this buyer that came out of the blue, I still probably would have that building, but the opportunity arose, and I'm one that wants to buy units and hold them forever, but I'm also open-minded that if the right opportunity comes along and I need to raise some funds, or, something, a different season of my life is there, I'm open to selling a building. Yeah. So, absolutely, this was an awesome opportunity. And we raised some cash, and that was a safety net with this hurricane coming through.
How much did you make selling that building?
Well, we grossed around $80,000 after taxes.
Wow.
That was the profit. That was the profit we made. But we got a lot of capital back from expenditures we made and money we put into it. So it was a really awesome opportunity. Now,
speaking of emergencies, I mean, you definitely had a tough time there with the hurricane and the flood damage, but with your day job is you're a realtor, and there's just less real estate transactions going on right now than, compared to a couple of years ago. Has that affected your income for your day job?
Absolutely, Dan. I would not be in the position I am today without real estate investing. I'm a full-time real estate broker. The bread and butter is getting up and going to sell residential properties to, buyers and sellers. This quarter, if you're paying attention to what the Fed's done, rates are better than they were in the first part of 2024. And in our business, I'm not going to speak for everybody else, but our business, we've seen a significant contraction with activity. The demand, it's there, but it feels like we're in a little bit of gridlock. So if I was not a real estate investor right now, accompanied with being a broker, if I was strictly a broker, depending on my broker income, I'd be sweating, because I feel like there's a lot of agents like myself out there that are seeing the same thing with contraction.
Yeah.
So it's been a blessing being an investor and being able to have this other source of income.
Yeah. I mean, and it's like we're talking about, having cash on the side for emergencies, but it really illustrates how important having cash flow is, whether you're a real estate broker or you have a day job somewhere. You never know if you go to work, if your company is going to lose a big customer or have some kind of financial difficulty and have to do layoffs. Not that you maybe did something wrong with your job, but your company is just getting in trouble. And having another source of income is just so important. Just having that cash flow. I don't understand why everybody doesn't own a few rentals to have some cash flow in their life.
Absolutely. Cash flow. And just like we talked about with this 16 unit, a lot of people aren't going to go out. Most realtors aren't going to go out and look to be a multifamily investor, but even having a house, even having a couple rental houses and an opportunity arising where you could sell one of those and have a big chunk of cash. I mean, that's going to get you through the winter months, the wintry seasons of the real estate market. It's going to get you through. And, I encourage any real estate agent, broker, anybody with a W-2 out there, you need to get involved in investing in real estate because the benefits are amazing.
Absolutely. Well, let's take a look at your numbers. Now, I think it might be interesting to compare your numbers today, your cash flow numbers compared to what they were on the podcast 2 years ago. So 2 years ago, you were bringing in just under $10,000 in rent every month. How much are you bringing in now?
Right now, we're bringing in around 18,000, just over 18,000.
Awesome. That's a pretty big jump. Now, as far as your cash flow after all your expenses, your mortgage, repairs, everything else that might come up, you were at about $1,300 a month 2 years ago. Where are you today?
Right around $3,500 a month.
Awesome.
If we don't have a major expenditure.
Yeah. I mean, so having $3,500 a month is really kind of awesome. I mean, that's gotta be a huge help in your life. Just knowing that if you don't sell a house that month or you don't sell a property, if you don't have any income, knowing that your rentals are bringing in $3,500 a month must be huge.
It's an amazing feeling. It's a goal that, when we first talked, that I set out to do is to increase my monthly cash flow, increase my monthly revenue. And we did it. And my mindset in this business has evolved, but it's definitely a very satisfying feeling to see the portfolio grow the way it did.
Now, you mentioned on the show last time that your long-term goal was to get to $30,000 to $40,000 a month in cash flow. Is that still the goal?
Absolutely, Dan. Absolutely. The goal is to be in the rental business and continue growing the portfolio. That 16 unit acquisition was actually part of the achieving that 30,000. That brought my total gross rents to just shy of 30 at 28,000. And if we hadn't sold that building, we'd be at the goal. We took advantage of the sale, and a lot of my friends and family were like, "Hey, are you getting out of the rental business?" And I said, "No, I'm taking advantage of an opportunity to raise some cash and look for another opportunity because, I started thinking about this 16 unit. Although it was a good building and we made some good money on it, it was, hey, is this building in the path of progress? Is this building somewhere I want to be married to it for 20 to 30 years?" And ultimately we decided no. And so now I'm under contract on another acquisition back in my home market, which I do believe is in the path of progress, and excited about it. It's an 8 unit and the rents are under rented. It's a mom and pop landlord, and we contacted them directly, and hopefully it goes through. We're waiting on the appraisal to come back and hopefully close before December.
So for that building that you sold, that it didn't really meet your criteria, it wasn't exactly what you were looking for. Why did you buy it in the first place?
Well, we bought it in the first place because the location itself within this smaller market was excellent. This building was a townhouse style apartment complex in an area with really high end homes, 400,000 for this market. It was the only apartment building, so it was a very desirable location within this market. But the entire market itself was a little bit outside of where I would say the path of progress was. We've got a local hospital here in my home market that is really booming. And so this building and this market itself was about 30, 40 miles away from that hospital. And I started thinking, long term, I don't think this is somewhere I want to be.
That makes sense. So was it hard to sell the property?
No, it's funny. The gentleman I bought the property from connected me to the buyer that I sold the building to. It was hilarious. He reached out. He said, "Hey, I don't know what your plans are, but I ran into so-and-so and they expressed interest in the building. I told him I'd sold it to you and shared your contact info with them. And he said, reach out to her and see if she'd be willing to pay you what you'd want to sell it for." And I said, "Well, I don't know if I'd want to sell it," but started thinking about it and ended up working a deal with her. And we just closed a month ago. So
wow. And so how long did you own that property for?
We closed in March of 2024 this year, and we just closed. It was a short-term held asset. So we looked at the tax liability and said, is it worth it? And ultimately decided that it was, because it was a great deal.
Yeah, that's a big consideration, that if you own a property for more than a year, you get taxed at a lower tax rate. So that's a big consideration, but the numbers still worked. I mean, you were making enough profit that it didn't matter that you were going to pay more taxes.
Yeah, I'd done a 1031 before. I'm sure many of the listeners are thinking maybe do a 1031, but no, I wanted to keep the cash. I didn't want to roll everything into another property. And I am under contract on another building now, but that is going to be a no money down deal. And so we just wanted to raise some cash, and we're okay with the tax liability.
If you're investing in the Princeton, West Virginia area or Southwest Virginia and you're looking for a good realtor, reach out to Nick. I think he would take good care of you. I've got his contact information on the website. You can find it at rentalincomepodcast.com/episode 494. I'd like to thank Chaley Ridge from Ridge Lending Group for sponsoring today's episode. If you're looking to buy a rental property, whether you're just getting started or you want to add to your portfolio, reach out to Chaley. She's got a ton of different loan programs, and she can find something that'll work for you. You can find out more by going to ridgelendinggroup.com, NMLS 42056. Thank you so much for checking out the podcast today. I'll be back with a new episode next Tuesday. My name is Dan Lane, and this has been the Rental Income Podcast.